Good afternoon. I'm Connor O'Brien, CEO of Beanstox, and you see in the background there a pretty interesting flag. Actually, it's a composite of a lot of album covers, and then somebody painted the American flag over that. Anyhow, really interesting artwork by some friend of mine. So today we're going to talk about some topics here that are interesting to everybody. One is, let's call it the math to becoming a millionaire, and there really is a relatively straightforward mathematical way to do that. We will talk about zero-based budgeting and some additional topics. And we're going to keep it relatively short. And then I think just something to look forward to in the next couple of events, we will have Kevin O'Leary back on. He is currently in essentially a pretty intensive shoot for a new show that's called Money Court. And he is Judge Wonderful on Money Court. It's actually real people that decide, yes, we're going to go ahead and do this televised reality TV version of court as an alternative to actually going to a real court. But ultimately, the decisions are apparently final and binding. All right, so let's just take a look at the math to becoming a millionaire. It maybe sounds a bit fantastic, but it's actually mathematically correct. For someone who invests $100 a week, starting now, let's say they're 25 and they invest for 40 years, that $100 a week would be $5,200 a year. And if you did that for 40 years and just saved it, you'd have $208,000. Okay, not bad, $208,000. We're going to show you some math later on why that isn't probably isn't enough for most people to have a retirement with disposable income they would like to have. So what do? If you invest that same $100 a week and get the kind of returns the market have generated for people over the past many decades, not every year, but averaging out of the decades, at around 8%, you would end up with $1.5 million, which for many people is enough, is more than enough to have a comfortable retirement. So think about that. Savings, all right, it sounds all right, but it actually doesn't grow, doesn't do enough for you. Whereas investing grows, and growing at those historical levels, 6, 7, 8%, often it's more than that in some years, gets you to a much, much better place. And the thing about investing in stocks or a diversified portfolio of stocks, or the way ETFs do, which is to own hundreds of stocks in each ETF, and blending these ETFs the way Beanstox does for clients, gives people diversification, it gives you ownership of companies. Companies grow typically because they become, the successful ones become bigger, more profitable, more valuable. They also tend to pay dividends, which is essentially getting paid on your money while the company is generating profits. It's your share of the profits from the companies. So that's the story, and that's the math to becoming a millionaire. It's one of the most mathematically simple ways to do it. Nothing is guaranteed with investing, of course, because markets go up and down. But over many, many years of history, you can take a look at it and take away some confidence that history will continue. You can take away some confidence that the economy will grow. And with that, the value of the companies you own through diversified investing will continue to grow. Not every company is going to grow. Some will become like Kmart and go to zero, but many will become extremely successful, whether it's Walmart or Apple or so many of the others that do grow. It's too hard to guess which one's going to grow fastest. For most people, it's too hard to guess, and that's why Beanstox does it for you. It doesn't do the guessing, but just selects for you an appropriate portfolio of ETFs that invest across large cap stocks, small and mid cap stocks, also invest in dividend growth stocks, and a little bit in non-US stocks. But it's a very US focused investment strategy that we think matches with people's desires, US dollar spending in their lifestyle, and US dollar investing for their investment portfolios. We did have a request from one of the prior calls. One of our audience members asked us to talk a little bit more about investing. And so I've just done that very briefly now, and we'll get into it in more detail in one of the calls coming up soon. We'll actually go through a very specific portfolio for people that shows them if they had the client profile that matched an 80-20 portfolio, meaning 80% ETFs that own stocks, 20% ETFs that own fixed income or bond investments. What exactly would it look like? We will show you. That is coming in an event coming soon. So the next thing is, fine, how much money do I need to retire? And each person is going to end up with slightly different math on this. It depends on who you are and where you live and a lot of other things. It depends if you're single or married. How much Social Security payment are you getting? How much more do you need to supplement that so you actually can live the lifestyle that you want? There's some really interesting information on the web, and I would encourage you to also go look at that. But here's a summary. One is figure out how much you're going to spend. There is a rule of thumb out there that when you retire, you will probably spend about 80% of what you were spending pre-retirement. And exactly why people spend less, you can sort of start guessing. I mean, there's some things in life you just don't need to do when you're retired. You don't need to buy new suits. You don't need to spend money on some of the kind of things that you might be spending money on when you're working. You don't necessarily need to commute to work, other things like that. And you may be more patient with when you book your vacations. You can book your travel well in advance. You spend less there. Lots of these types of things. You might have a big house. You can downsize and live in a smaller house, or in fact move to a location that's more relaxing and so have a lower cost of actual housing. So that's the 80% rule. The next thing, you got to think about how your investments will grow over time. And we talked about that in the first slide. Simple savings, limited growth, whereas investing gives usually more significant growth, although it's not every day and every year. So you want to think about that. And we'll get to some math in a second. The next thing is, how many years should you plan for? And this is a little bit of a touchy subject, but people typically live these days till the mid 80s. And for anyone who's currently in their 60s or 50s or 40s, the odds are the life expectancy is going to be even higher. So for many people, let's call it standard math, and everyone's got their own view of this. If you work till you're 65, and then you should expect another 20 years, you need at least. So you need to have at least enough money for that. And there's math to this, which is, you take your current lifestyle. I'm going to use some standard math that is in the web, and it's in some examples I read before this call. Typical person might spend $50,000 a year. 80% of that is $40,000 a year. So now you need $40,000 a year for your retirement years. If you're married and have two sources of Social Security, you might be getting something like $2,000 a month times two. So that would work out to $2,000 a month would work out to $24,000 each, and that would be your $48,000. And if that really was what you were getting, you would already be there. On the other hand, many people aren't going to have two sources of Social Security that are quite that generous, and relying on Social Security may not work. So let's just imagine you needed another $20,000 on top of your Social Security. Where would you get that from? This is the 4% rule that you saw on that page. If you can expect to get a 4%, let's call it spending rate on your investment account. It says here savings, but it's kind of savings and investing. Once you're spending it, it is your savings, even if you leave it in an investment portfolio. So how do you get $20,000 if you're only spending 4%? Just think of this. Obviously, if it was $100,000 that you had in your investment account, 4% of that would be $4,000 a year. Not enough. If it was $500,000 that you had in your investment account, 4% would equal $20,000. So if you think back to page 1, just saving, not investing, gets you to $200,000, not $500,000. You would need to start investing early to start giving your money time to grow, so that you end up with more than 208. You end up with perhaps 500,000, perhaps 1 million, perhaps 1.5 million. So that really is the math behind sort of planning for the future, way down the road, perhaps for many, many of you. But just expect in current dollar terms, you might need 80% of your current spending level or your pre-retirement spending level to sustain the kind of lifestyle you might want to have in retirement. If you want to retire early, the math still applies. You need to have money. And you might get lucky with a winning lottery ticket or some other thing, but one suggestion is, rather than just depend on getting lucky with lottery tickets or some kind of a home run, start building your portfolio early, give your money time to grow, and you'll see how well that works. So the next thing will help people, I think, figure out how to create enough money from their current income to enable some of it to go into investing. This ZBB is really zero-based budgeting. There are a few different ways to look at it, one of which is presented here, and it basically suggests, do the math and figure out how much money do I make each paycheck, each month, each year, and how much money do I spend? And typically zero-based budgeting talks about the expense side of it as looking at starting from zero What money do I have to spend? I need to eat. I need to have somewhere to live. I need to have a way to get to work. And those are the basics. If I'm supplementing the healthcare costs, I need to plan for that. Before you think of the discretionaries and extras, even your healthcare club, well, you could actually go run outside without spending money. So if you actually don't have enough income to pay for all of those extras, you should start thinking about cutting the extras and get it down to a zero-based budgeting approach. And then see how much extra money do you have that you can decide to use for whatever the extras are. So one suggestion is this: when you look at your expenses, pay yourself into your investment account some minimum weekly or monthly amount. Treat it like an expense in life that you have to do for yourself in order to build that portfolio, build that wealth, so that when later in life you approach retirement years, you're in good shape. Treat it like food, like lodging, like must-have transportation, like healthcare costs. It's your financial health. And then look at the income side and say, well, I'm not making enough money. See how you can deal with that. Do you need a side hustle? Do you need to do something interesting, whether it's tutoring or teaching people music or languages or math, or be an Uber driver just to and from work if that's the way you travel? You don't need to change your life. You just need to use a bit of your time a little bit differently, and all of a sudden you might be making an extra $100 or $200 a week while doing something you actually enjoy, or doing something you actually would have been doing anyhow. So think about it. Zero-based budgeting. Take a look at it. You'll probably, even if you don't have a financial stress situation, you'll probably get some ideas from that on how to cut out money spending that is unnecessary. And then you can use that money to invest in yourself and grow your wealth. So those are the topics for today, and I thank everybody for their attention. I would encourage people to send us a note. Hello@Beanstox is one way to do that, and just let us know what you'd like us to cover in the future, and we'll do the research and bring that information to you on the next live stream events. Thanks very much for joining us. If you don't already have the Beanstox app, I encourage you, please check it out. Go to the app stores. We're constantly upgrading it, making more banks available, more bank connection available, making things easier for people. If you have suggestions for us, please send those in as well. You can send them to customer support at Beanstox, or you can send them to hello@Beanstox. We'd love to hear from you. Thanks very much for your time today.